My name is Robert Bonavito, New Jersey forensic accountant. This video is part of a series of videos where I discuss forensic accounting topics for educational purposes only. If this was a litigated matter, I would take a different approach, have different conclusions based on different facts and circumstances. My name is Robert Bonavito, New Jersey forensic accountant, and today we're going to talk about the Greek alphabet. Okay, I have two. This is Lambda and this is Alpha. And these are two terms in finance that you hear quite often if you pay attention. And if you have a stockbroker or investment manager, you should always ask them, what's the lambda on that stock and what's the alpha on that stock? Something we use in court, we use to understand businesses, especially if it's a publicly held company. And it sounds, when someone says, what's your alpha? It sounds complicated. All alpha is your risk-adjusted return. For example, if I'm taking a 10% risk by investing in stocks and you earn me 10%, well, you really haven't done anything, right? Because you basically you're giving me the 10% risk that I earn. You should earn 15 or 16%. So when you ask your stockbroker, hey, what's your alpha? They may not know what it is, but hopefully they do. And if they say zero, like when you listen to the commentators on TV, they never will tell you what their alpha is. You'll never say, well, so-and-so, his portfolio has 6% risk, and he is making 8%. They never say that, but they should, because that's how you judge if someone's good. Now, if I go on TV and I say I have a 20% return on my stock, you can say, wow, 20% is a lot of money. But what if I took 35% risk, right? What if my alpha is 35? That's not good. So you really need to know what the risk-adjusted return, what's the alpha is the key word. CNBC, these other, hey, you bring a guy on, I want to know what his alpha is. Is there an alpha? And who did it? Is it verified? Most of the time they're not hitting alpha. Even if they have 7-8%, they're not doing alpha. And then lambda is, it's just it's used in options a lot to calculate risk. It's a ratio. For example, the higher the ratio, the more risk. And we'll use that in some of our finance models. If something's very risky, we'll multiply it by 6 or 7. If it's not, risky, it could be, 1 or even a negative number. But this is a ratio used to adjust risk, and this is what your risk-adjusted return should be. And two terms you may want to just be familiar with, and when someone's talking about their portfolio at a dinner party, you say, well, what's the alpha? Well, if you earn 10%, what's your alpha? Is the risk in that portfolio 12%? 10% is not good. If your risk is 8%, 10% is very good. If you have any questions about this, feel free to email me.